On Market Watch now, the Nigerian equities market reversed course this week, closing Wednesday with a modest gain of 0.10%. Now, this uptick came courtesy of investors buying banking and insurance shares. The key index, the all-share index, increased by 100.55 points. However, despite the daily gain, the ASI remains down 3.41% for the week and 3.94% for the past 4 weeks. And on a brighter note, the index maintains a healthy year-to-date gain of 33.61%. And beginning with the all-share index, let's take a look at the breakdown of activities yesterday. And looking at the all-share index, we have a gain 0.10, albeit marginal compared to the loss of 1.93 we saw on Tuesday. This might just be a drop in the ocean. And then it's closed to 99,908. Now, looking at market capitalization now, we see it here, 56.5 trillion naira. Now, let's take a look at the top gainers from yesterday's market activities. For top gainers, we have Ikeja Hotel, 10%, Fidelity Bank, 9.88%, Academy, 9.77%, Morrison, 9.71%, and Prestige, 9.26%. And then we have the closing prices here. For the top losers from yesterday's market, we have Livestock, minus 10%, CWG, minus 9.79%, then International Energy Insurance, minus 9.79%, FTN Cocoa, minus 9.72%, and then Africa Prudential, we have it at minus 9.42%. This also tells us the prices the stocks closed yesterday. And now for the sectoral performance. Banking, just like we said, it had a good one yesterday, adding 1.1%. That's for banking. Insurance also added 0.58%. Remember what we're coming from. We've been having a lot of decline in the banking sector. So having this sort of means a lot, and we know that. We just hope that this continues, basically. For oil and gas, it maintains, that sort of inactivity, kind of. And then for consumer goods, 0.05%. For industrial goods, we have it there, minus 0.0%. And this gives us a picture of what happened yesterday at the market. Thank you for joining me on Markets Watch. We have more for you this morning on Business Edge. Stay with us, don't go away. In a recent meeting, the Central Bank Governor, Olayemi Cardoso, sparked discussions on the country's economic trajectory. Key topics included the relationship between population growth and economic output, potential growth areas, the impact of subsidy removal, revenue plans, social interventions, and the tightening of monetary policy. Well, let's delve into these issues and explore the challenges and opportunities that lie ahead for the Nigerian economy with Sam Chidoka, the CEO, Kairos Capital. Thank you, Sam Chidoka, for joining me today.
Thank you for having me. My pleasure being here.
All right. So at a recent breakfast meeting, we heard the central bank governor trying to draw a connection between population growth and output growth, or you might just want to say GDP. I'd like you to talk to us about the dynamics between both.
Well, so there's a correlation between population growth and GDP growth. The Bretton Woods institutions have always recommended that your GDP growth should be much higher than your population growth. So a measure of an economy that is doing well is when, because GDP is the aggregate of goods and services produced in that economy for a particular period, right? So your GDP growth rate should ordinarily be higher than your population growth rate. But in recent past in Nigeria, we've had a situation where population growth, which is estimated at about 3%, and then our GDP growth has always been lower than that. So if you compare a GDP growth rate of about 2.6, 2.7% to a population growth rate of about 3%, that means we are birthing more people than we are able to feed or we're able to cater for. So again, that's something for managers of our economy to worry about. We should have a situation where our population growth should go back to the days when we used to do, where our GDP growth, should go back to the days when we used to do 5%, 6% per annum. And that way, we're growing faster than population. And that way, we are more productive as an economy.
All right. So for output growth to exceed population growth, which, of course, you have also said is a good thing, we have three suggestions, whether we have to increase oil production to 2 million barrels per day. And when we talk about this, I remember, what we just recorded last month, that definitely isn't good enough. And then we also talk about maybe growing the agri-sector to 3% as against 2.1% in 2023. And the third thing would be boosting trade activities to support a positive current account. Now, which of these do you think we can achieve in the shortest term, and what are the hindrances really to achieving these?
Unfortunately, I don't think there's any of them we can achieve in the shortest term, because again, a short-term approach to managing the economy is not the best for me. I think that when you manage an economy, you have to do it into a mid to a long-term approach. So for instance, let's take the first one, increasing oil output. Truth be told, we're doing somewhere around 1.2, 1.3 million barrels of oil and condensate per annum. Our OPEC quota has recently been cut because we're not meeting that quota. We're at 1.8 OPEC quota before, but it's been cut recently to about 1.3 because we're not meeting that quota. You need to deal with issues around insecurity. You need to deal with issues around oil theft. Right now, all the acreages that we have in the shallow waters and near and onshore, many of the onshore assets we have are not producing today because of insecurity. It's the deep offshore assets that are really ramping up production. There hasn't been a lot of investments in our oil and gas mining of new fields and all of that, simply because of insecurity, oil theft, and things like that. So that's not an immediate, to solve that problem, you need to have a mid to a long-term solution to all the bounds of insecurity around that area. The second one is agri-growth. So what we have done so far in agriculture is we haven't quite mechanized agriculture in the levels that we should. If you look at the economies where agriculture is the mainstay, is mechanized agriculture, not subsistent agriculture. Subsistent agriculture will feed you and your family. Mechanized agriculture will feed communities and a nation. So again, we need to make that investment. We have the numbers, but we need to make the investment in mechanizing. You don't just say we have numbers and everybody should carry cutlasses and go into the bush and farm. The output versus the input will not make sense. But if you mechanize, then you can produce more. Again, agriculture is affected by insecurity.
I was coming there, so you just take it up then.
Yeah, because again, insecurity is a problem with agriculture. So all of these things are tied together. We need to fundamentally solve the problem of insecurity in the country and to help us to begin to boost production and productivity.
All right, I'd like you to talk about boosting trade, really, and how that would also impact on our current account. I'd like you to speak to that. What are the hindrances, really, as we speak?
So again, before you can even trade, you have to produce. What are you trading? You have to be productive to trade. It's on record that many of the cargo aircrafts that come into Nigeria go back empty. Many of the cargo ships that come into Nigeria go back empty because we're not producing. So what are you producing? You are either producing agricultural products that are for export or natural products that are for export. If you look at the whole value chain of our natural products, you will still find insecurity. Whether you're talking about gold mining in Zamfara or cocoa mining in the southwest, or whether it is coal in the southeast, there is, as long as we have this overhang of insecurity, as long as we have the overhang of banditry, we're not able to produce these things and export. Also, we are in a situation where our currency currently enables us to be productive and export-minded. When you have a weak currency, what that drives you to do is to try and get foreign currency. And how do you get foreign currency? By exporting. But you can't produce and export except we begin to take the necessary actions as an economy. And I dare say, the necessary steps to becoming productive, the necessary steps to becoming export-minded are not quick fixes. There is no quick fix. They have to be mid to long term. And so what typically happens in Nigeria is that when a new government comes in, they start a new project altogether. It shouldn't be. We have to first set a mid to long-term priority drive, and we have to be consistent with it. We have to deal with insecurity. We have to deal with issues of unemployment. We have to deal with issues of government enhancing those that are in the critical sector of production.
So Mr. Chidoka, let me come in here.
Yes.
Let me come in here. Do you get the sense that the government, that's the fiscal authority now, is actually, doing all of those things that you have talked about? Are they taking necessary steps to achieve this?
So, on paper and in the news, it sounds like we're taking the necessary steps. Until we begin to see the effect of it, those necessary steps are not working. Until we begin to see the effect. You don't just have to say it, you have to do it, and you have to be consistent with it. You cannot be productive in an economy where you're trying to start a small scale business that could blossom and become self-sustaining and even export-minded. As soon as you start that business, government comes to you with all various forms of taxation, all various forms of licenses, multiple taxation. You go to the ports, inefficiency at the ports. Some people take perishables to the ports and they perish at the ports. We have to ease of doing business. Everything, there has to be a handshake between the monetary policy framers and the fiscal policy framers for us to get to the necessary place. Now, if another elephant in the room, how do you become productive without power? And there is no quick fix to power. Power is not a shelf item. You don't just go and buy power. You have to invest. So again, kudos to the government. The right pricing of power in Nigeria is the right way to go, because when you right price, the gencos and the discos get paid right, and then they can reinvest. But of course, the national grid is an elephant in that room also. We have to solve that. You solve power problems, you solve insecurity problems, you solve multiple taxation problem, you solve ease of doing business problem. As you begin to bring all of this into a fusion, you will begin to see productivity and advancement in our economy.
But if I get you correctly, you talked about right pricing. Are you trying to say that you do not have an issue with the hike in the price of electricity? Rather, what you have an issue with is the inefficiency within the system. Is that what you're trying to say?
Absolutely. So we did a recent study to find out which is cheaper. So let's assume that you are on band A. We took an estate in Lagos and did a study of supplying power to that estate. Is an estate that has 100 apartments. Supplying power to 100 apartments using generators and diesel, as against paying 225 Naira as band A. The analysis showed that that estate would generate power using diesel at 308 Naira per kilowatt hour. Meanwhile, band A is 225. So you are still in a better situation, paying 225 Naira per kilowatt hour and getting power for 20 hours. So what needs to happen is that it's a question of the chicken and egg, which one comes first. I think that we needed to right price. Now that we've done the right pricing, sooner than later, there will be no excuses. It's now for the discos to make sure they meter Nigerians, make sure people pay for what they consume, reinvest the money they are getting, generate more power, and we are able to reinvest our distribution network, distribute more power. If we are getting the power, I don't think paying for it is the problem. The challenge you have is that people have to pay for what they are not getting, and that itself is a major problem.
I think we're going to try to be very nice here on News Central. Maybe we'll keep our eyes on that story and see what happens in the next 6 months. I mean, we're talking about right pricing now, so we're going to give them some time and see if they are going to live up to the expectation. Nice one right there. Now, isn't it interesting that the CBN governor, boasts of resetting the economy on the back of two critical reforms, and one of them being subsidy removal? Now, talking about subsidy removal, this is something that has become controversial, if you ask me. I mean, we had a situation where we've got people, even within the government, come out to say certain things about subsidy, and then we also have MD of Rain Oil also coming to say about a certain amount is being paid on subsidy, every month and all of that. So speaking about that, what do we even believe? And truthfully speaking, what do you think is in the best interest of, Nigerians and the Nigerian economy?
That's a mouthful. Okay, let's try and dimension the issues and separate them. First of all, I think we're still paying subsidy. I don't have the data. I don't have the facts.
But why is it difficult for government to say it in clear terms that we are doing this, rather than NNPC telling us they are paying full recovery? Or, is it difficult to ask for? Is it a problem?
Look, Perpetua, I can tell you two things, and they will mean the same thing. I can say 6, I can say half a dozen. They mean the same thing. So whether you call it under recovery or you call it subsidy, it is a subsidy. Right. Landing costs today from operators in that market, I hear that landing cost is anywhere between 1,200 Naira to 1,300 Naira per liter of PMS. And in Lagos, if we use Lagos as a proxy, we're buying fuel at 650, 620. So somebody's paying for the differential. That's a subsidy. So in my view, we're paying subsidy.
So which is good for Nigerians and the economy? Continuing this way?
So there is the political angle and there is the economic angle. The economic angle is that such subsidy has to go because it's a consumption subsidy. Fuel is a consumption subsidy, and I do not subscribe to such subsidy. Governments can subsidize the economy. Governments can subsidize the nation. They can subsidize healthcare. You can subsidize education. I do not subscribe to subsidizing consumption. If you, okay, I give you an example. Technology has moved. Today, we're having this interview. I am seated in a different place, you're in a different studio, but by virtue of IT, we can have this interview. There are alternatives to being on the road. There can also be alternatives in terms of gas-driven vehicles. There are alternatives in mass movement, in terms of mass transportation, whether it is by train, by trams, or by buses that move people and do volume discounts because it's moving a lot of people than having vehicles on the way. There are also options for people to choose more efficient vehicles in terms of fuel consumption. So there are options in terms of, but there is no option to healthcare. If somebody is sick and cannot afford healthcare, the person will most likely die.
You know what, Sam? Let me throw this in. The reason we're having this conversation, the reason Nigerians, get excited or even anxious when we talk about anything happening to fuel prices is because power is not reliable. If power was reliable, some of those companies, manufacturers, businesses would not complain so much. Not so many people would really care about PMS selling for maybe 1,000 Naira. But the fundamental issue is not being addressed. So do we pay for that?
So again, the big manufacturers do not use PMS. They use diesel. Diesel has been deregulated eons ago.
Absolutely.
So it's not a PMS conversation. They operate with generators and they use diesel. And diesel is already priced at over 1,000 Naira per liter. As a matter of fact, we were buying diesel at 1,400 Naira before Dangote Refinery came on stream. And with Dangote Refinery today, we are doing about 1,000 Naira per liter of diesel. And that is the elephant in the room. It's not a PMS conversation. So when you talk about removing subsidy on PMS, I think it's more a political conversation than an economic conversation. What I believe makes sense in an economic scale is remove the subsidy from PMS and apply it to things that help the economy to become more productive. Only a healthy nation can be productive. When people are sick, when people can't afford basic health care, then they cannot be productive. When people can't go to school and get whether technical or other forms of education, because again, I think on that education leg, sometimes we get it wrong. Everybody doesn't have to go to university. Everybody doesn't have to be a doctor, an engineer, and all of that. Some people have to go to technical schools. Some people have to go to all different types of education. But the point is to make the nation productive. So invest in that. Put a subsidy in education. Don't have the number of pupils out of school at staggering amounts in the Northeast and in the Northwest and in different parts of the nation. We need to reduce all of that. That I will subscribe to subsidy, because if you subsidize those, if people go to school, they will be less prone to crime, they will become productive for themselves and for their family, and ultimately add to the GDP of the nation. If people are healthy, they'll be more productive. But you're subsidizing fuel. How many people actually own the cars? You can use diesel to fund large-scale movements. If people can go on trains, invest in that. It's a gradual process, but we can invest. Take the savings from subsidy removal and begin to invest in CNG-driven buses and vehicles. And of course, even with power for those who use diesel, there's also an alternative. You can use other forms of power. There are many companies in Nigeria today that have gone off-grid. But what do you do about healthcare? What do you do about education? You can't go off-grid.
All right, so let's take a look at, CBN's tightening policies. We have CRR at 45%, liquidity ratio 30%, MPR 24.75%. And now just yesterday, we hear that, there is a circular talking about LDR, that's a loan deposit ratio, putting that at 50%. And I wanted to also look at, tie that with the high interest rate we're seeing in the fixed income market. Could you speak to us about the impact this is, or let's say could be having on the real sector?
So the CBN governor has been clear. He's been clear as daylight. He's clear that he is targeting inflation and he's targeting exchange rate. And when you target inflation, in an inflationary environment, you tighten. It's economics 101, right? In an inflationary environment, you do your best to tighten instead of being expansive. So everything that the CBN governor has done so far has been headed in that same direction of tightening. So whether it's increasing the MPR to 24%, thereabout where we are today, whether it is asking for further consolidation or improvement in the shareholding of banks, whether it is in the fixed income increase in rates, or whether it is the directive that people can't have FX assets backing Nigerian loans, or this decision now to reduce the loan to deposit rate, which used to be, I think, 65%, thereabout, if I'm correct.
65, yes.
Reduced to 50%, right? So all of this is geared towards reducing liquidity in the market. Also,
we understand what it's geared towards, but I'm talking about, let's look at, how is it affecting the real sector? Is it having any impact on the real sector? Also, I would like you to also tie that to, interventions by fiscal authority, if it's measuring up and all of that.
So unfortunately, inflation, for instance, is a lagging indicator. It's not a forward-looking indicator. So you're going to take the decisions, you're going to change the policies, and wait for a 2 to 3 months period before you begin to see the effect on inflation. However, it's important to note that between January and February, inflation went up by, I think, 1.8%. For March inflation, the rate of increase has slowed down in March. I think it's a 1.5%.
1.5, yes, compared to 1.8 in February.
Yeah. So you see that what the monetary policy is doing is beginning to have effect. So whilst inflation is still accelerating, it's accelerating in a decelerating mode, if people get what I mean. So
I do.
It's increasing, but at a reducing mode. So on the monetary policy, there's just so much you can do. The monetary policies, monetary instruments are known. The challenge we have is the fiscal side. Is the fiscal side doing enough to tie to what we're doing, what is being done on the monetary policy? I dare say no. I think we're still spending money like it's going out of fashion. I saw a recent meeting of some establishment in Nigeria. Nigerians all having a meeting, government establishments, and they had that meeting in London. The question is why? Why do Nigerians fly out to go to London to have a meeting? It's because we do not yet understand the need that on the monetary policy side, we're trying to squeeze and contract the economy. You can't now be spending like it's going out of fashion.
All right.
So the fiscal side has to come to the table and help the monetary policies so that we begin to see the implementation. Also, you can see currency. We have seen Nigerian Naira gain 40%. So
okay. I think that's a bragging right for the CBN and the Monetary Authority in general. Thank you so much, Sam Chidoka, CEO, Kairos Capital. Thank you for your thoughts and your time on the show today. All right, we take a break. When we come back, we have more for you. Stay with us, don't go away. Glad to know you stay with us. At the IMF spring meetings, the Central Bank of Nigeria Governor Olaimi Cardoso addressed concerns about declining external reserves, assuring citizens that this decrease is not due to defending the Naira, but rather standard financial obligations like debt repayments. And also, the World Bank and the African Development Bank announced a partnership to provide access to electricity for 300 million Africans by 2030. This $30 billion project will involve contributions from government, the private sector, and the World Bank and AFDB. Joining me for more on this is Mukhtar Mohammed, CEO, Assure Investments Limited. Thank you, Mukhtar, for joining me today.
Thank you.
All right, just before you come on board, I'd like us to listen to the CBN governor.
Inflation was high and the exchange rate was under tremendous stress. And there was a crisis of confidence. And in such a situation, the biggest challenge, as far as I can see, was that of trust and the deficit in trust. It is not our intention to defend the Naira. It is not. What we're encouraging is for the markets to willing buyer, willing seller, price discovery. And ultimately, I perceive a future where central bank will really not need to intervene, okay, except in very, very unusual circumstances. As long as we have a vibrant currency market, why do we need to go in there to intervene? We don't need to. I can understand that, especially at the outset, there have been little cases where the Bureau de Change, the BDC, there was a need to get that segment going. And, you know, small amounts of money, relatively tiny amounts of money have gone into that to catalyze that happening. What you see with respect to the shifts in our reserves is a shift that you find in any country's reserve situation, where, for example, debts are due and certain payments need to be made. They are made because that is also part of keeping your credibility intact. I wouldn't let people get too excited about this thing. All I will say is that we are looking towards ensuring that we have a market that operates on its own, willing buyer, willing seller, and price discovery. That's where we're going to. The shifts you've seen in our reserves has really, you know, little or nothing to do with defending any Naira. And that's.
Well, there you have it. Mukhtar, thanks again for joining me today.
Thank you.
Okay, I think I would like to start by, saying what exactly do we mean when we say we're defending the Naira? And then what do we also mean when we talk about a managed float? I'd like us to explain those two before we then delve into what the governor said.
I bet you are defending the Naira managed float. It all depends. For me, it's all same of same. Defending the Naira is when you think the Naira has gone below its value, then you need to come in there and make sure that it gets to that value. Managing the Naira also is still the same thing. You want it to maintain a certain equilibrium. Once it goes outside of that, you think it's overvalued, then you come in to make sure there is stability. So it depends on which way we see it. The only reason this is different from every other one is because this seems to be like what we call a float, willing buyer, willing seller. And sometimes because of the market is awash with liquidity, the willing buyer and the willing seller will have to teeth towards what the liquidity that at the price that the CBN think it should be at that time. Because when you talk about intervention, it's definitely the CBN that definitely intervene in the market. I keep saying it. There is no currency market all over any part in the world that the CBN will just sit down and watch it begin to do whatever it wants to do. So I don't know why the governor is saying that he wants a willing, he wants a market that they will not need to intervene. But I am happy that he said there might be cause, but he wants it to be real because there should be cause for you to intervene, like what they are doing now, giving the product change money for them to make sure that there is price stability, especially meeting at the retail end, which has been the main cost of why the Naira and the Naira exchange the dollar is. So I totally agree with him that he said you don't have to intervene every time, but I think there will still be time whereby you need your CBN to intervene. But like I said, the managed system is you fix a particular fixed price, and that is the price that will be. Intervention is you allow market forces, but when they go above the boundary, then you make sure you intervene with liquidity into the system to balance the market, to make sure that your currency is value as what it's supposed to be.
I had to start with that because, after this particular speech, I saw a lot of headlines saying a lot of things, but I feel this might just be a matter of semantics. I mean, I do not think he said the CBN is not defending the Naira. He said that, I quote, "It is not our intention to defend the Naira." And then he said some other things, really. But then let's talk about, this now. I want to believe that you do not have an issue with the CBN, doing this, because you've also tried to explain it and all of that. But then talking about the depleting, foreign reserves, is that something you think we should be concerned about? Is it even depleting as much as is being stated, really? When we look at it technically, is it something to be concerned about?
It's something to be concerned about when your reserve is within 2 months, you deplete by almost $2 billion. I mean, it's huge. We're not talking about $200 million here. We are talking about $2 billion have left the reserve. So it's good that the CBN came up to tell us why we have seen that happen. We have always complained about our debt going to be a challenge, and I think finally is beginning to hit our reserve like we've always said. But what I've always thought was that even if it hit the reserve, you have an inflow, because again, inflow could help stabilize the market. But unfortunately, the CBN is just saying what we all don't know that they are paying, but no details about who are we paying this debt. Today, make mention of the Eurobond. Sometime we are still going back to the market anytime soon to get Eurobond. So it's good, like you said, for credibility and integrity. I think it's good. It will attract more investors into the market to know that you can easily pay off your debt. But again, our reserve in the 7 years low, 2017 was an though the CBN governor later said that they have about $600 million that came in some 2 days ago. But we have to wait and see. That $600 million, what did it come out from? Was it inflow from sale of crude oil, non-oil oil inflow, or what? So those are details that I believe that the CBN will give us as time proceeds. But for now, it's not looking good if you have to deplete your reserve by almost $2 billion in 2 months. It's not looking good.
Okay, but looking at those who have tried to explain this, they're talking about the fact that we've paid some Forex backlogs and then we've paid certain things, just like the CBN governor said. And they're looking at all of this. Don't you think it's okay to probably understand why we have that sort of amount? That's one. Maybe I'd like you to just talk about that in less than 30 seconds so we can move on.
Well, when you talk about that, remember that was about 7 billion, was reduced to by 2 billion because the CBN said they couldn't pick it up with document for the other 2 billion, so we paid 5 billion, and that was not when our reserve went down. So if you add that now, 5 billion paid from 7 billion plus 2 billion, and that was 7 billion. So our reserve would have been doing above 40 something billion if not for this backlog. So if you look at it from that angle, that is healthy. Remember that we will not have to pay such a large chunk of backlog again. So, but when you look at it, the other way, paying debt servicing, which we know that was going to cover a lot of our reserves. So it's not so much cause for alarm that the CBN governor have finally came out to clarify the issue and said that we will still have inflow coming in. So, and again, I think the challenge we had was that we didn't make so much money from oil because our quota couldn't meet it, which they said it was due to technicality. So hopefully, when all these things are sorted out, the reserve will go buoyant again.
I remember earlier you talked about inflow, and I see that you're interested in, what that inflow is about. Is it non-oil export? Is it, oil export, or is it even FPI or even FDI? Why is it important to be able to, to be able to put a tab on it to say this is where this money is coming from, and what will be the implication of it coming from one place or the other?
Yeah, Pavicha, what it means is that means we are doing things right. If it is inflow, that means let me look. Like I told you, we have inflow from four sources. So any of these sources, when this inflow is coming from any of these sources, it's good for us. Foreign direct investment, foreign portfolio investment, sale of crude oil sale, and remittance from Nigeria and the diaspora. So if these inflows are coming from these four sources, then it's time to begin to be excited that means we are beginning to attract inflow. Even within 2 days, we are attracting about $600 million. That is good. So we need to know where it's coming in from. Hopefully, it's not one company paying us, giving us loan, or one international organ giving us loan. So that's why we need to know where this inflow is coming in from.
Well, that wasn't stated, and we do not have that information yet. But talking about foreign portfolio investment, there are those who have said this is hot money and it can just, go back at any point in time. What's your take on that?
Totally agree. Hot money, but again, you need hot money sometime in the short term to stabilize your reserve. So no economy in the world that does not enjoy hot money at a point. And so we need, the only challenge will be when hot money wants to leave, you have the means to help them exit. So thus far, I think from what the CBN is saying, we've attracted hot money of about I think about 2 point something billion. So hopefully they're not going to leave anytime soon because they came in for two treasury I mean through bond and treasury bills. So they have a particular time though. I think most of them are doing the 180 days tenure or 360 days tenure. So a lot of times for us to cover up so that by anytime they want to exit the market, we have enough liquidity for them to exit the market. But the challenge will come if we don't have enough liquidity at that time for exit the market. But I don't think we encounter that challenges again because it seems to be like there's light at the end of the tunnel in terms of inflow, in terms of foreign investors. Though, like you say, the hot money are coming. But I always say something. It's the hot money that will later on become FDI. So let's make sure we do the right thing so that the hot money will want to stay here and develop the industry that they actually came in to make hot money from because they will know that they will have a lot of opportunity there. But that can only be possible, not because of monetary policy decisions only. The physical side needs to begin to work.
All right.
If we want to see the kind of results we want to see, people are predicting, then the physical side needs to come in on time.
Mukhtar, I'm afraid.
Again,
I mean, let's also look at other conversations that took place yesterday at the IMF spring meetings, and one of them would be the one on Energizing Africa. How ambitious do you think that is? Aiming to connect 300 million Africans to electricity by 2030. How realistic is this target? I mean, given the current electrification rates and infrastructure gaps in Africa.
Perpetua, I am not as confident as maybe as you or maybe as those people in the meeting there, because again we keep saying that it looks more like every time we go to this they give us one promise or another. It's becoming a jamboree. So for me, I'm not excited about it at all. Hopefully we could see something come up in it. Hopefully, but like you said in your report, I think it's very ambitious. 300 million Africans. They will be. I wonder how they want to go about it. But again, they've not given us details. I think if they want to do this, that would be mostly through clean energy, and then we are talking about solar. So hopefully that's that's the only way they can energize the homes in Africa, and that will involve. You see, the challenge I have with those things is that when it comes to all those issues of energizing Africa now, like I say, we have to use clean energy and all these machineries or whatever we are going to use is going to come from them. So at the end of the day, whatever you see in terms of numbers, when it comes to the funds are not finding their way into Africa, they are just finding their way via aid, and that is the challenge. Aid alone will not keep Africa develop. We need to begin to think of how Africa themselves can develop Africa.
All right, I want us to close now. I have about maybe two things I want to tie together. Number one, to do this, AFDB, all of them, they're talking. World Bank, AFDB, they're talking about $30 billion, and they're also expecting that government will contribute, and they're also expecting, private investors. But for private investors, really, what sort of incentives can be given to them so they can participate in this? I would like you to take that maybe in 30 seconds so we can close.
Well, for private investors, what they will need is tax bracket, tax holiday. That's what they really will need if they want to participate in that. That's what will excite them. Outside of that, I don't see what will excite them any more than that. Then secondly, again, when we see, I think government, I wonder where they want the government to get the fund from. They say IMF and World Bank, IMF was talking, and World Bank were talking about how Africans leaders have not been able to meet their obligation due to debt servicing and also due to the COVID-19 pandemic. Most of them have not come out of it, and you're expecting them to add up funds for such an ambitious project. hopefully they should be able, but I don't see it happening at the time that they are thinking about it. We may have an extension of time because it's only when there is stability these things can happen. So for now, I keep my finger crossing, hopeful, but in one way, not too optimistic.
I guess you agree that energizing Africa is very important. What you're just concerned about is the timing and, the source of the funding.
Definitely.
All right,
It's
thank
very
you for
important because that will create industrial growth, especially if we have to touch the rural areas. And then that also put a snowball effect, especially for economy like, let me give my country, Nigeria. That means it will have a boost for non-oil exports.
All right, thank you so much, Mukhtar Mohammed, for your time on the show today.
My pleasure. Thank you.
Well, that's it on this edition of Business Edge. Many thanks for watching. I am Perpetua Fasami Peter. Do enjoy the rest of the day. Bye for now.